Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AMKOR Technology INC quarterly report. AMKOR Technology Inc. provides a wide range of businesses and services to the semiconductor industry. The company's offerings include outsourced semiconductor packaging and test services, turnkey packaging and test services, flip chip scale package products for mobile devices, flip chip ball grid array packages for various applications, memory products for system memory, or platform data storage, wafer-level CSP packages for power management, transceivers, sensors, and specialty silicon, wafer-integrated fan-out technology leadframe packages for electronic devices and mixed-signal applications, substrate-based wire bond, packages microelectromechanical systems, packages advanced system-in-package modules. The company also provides various testing services, including wafer, package, and system-level test services, burn-in test, and test development services. AMKOR Technology's stock price has experienced significant growth over the past year, with notable increases of 18.48%, 11.72%, and 68.92% within shorter timeframes. Several key events have contributed to this surge in stock value. The Arizona Semiconductor Campus expansion, initiated in October 2025, is a major catalyst for AMKOR's success. This $7 billion project establishes the company as a crucial supplier to major customers like Apple and NVIDIA, positioning it to benefit from the growing demand in AI and high-performance computing. Additionally, AMKOR reported strong third-quarter 2025 financial results, with record net sales of $1.99 billion and net income rising to $127 million. The company's advanced packaging offerings saw significant demand, particularly in communications and computing end markets. These developments have driven the stock price increase, solidifying AMKOR Technology as a leader in the semiconductor industry. The primary drivers of revenue growth or decline are multifaceted, influenced by both internal and external factors. Revenue growth is primarily driven by increasing demand for advanced packaging services, high-performance computing, and the growing semiconductor content in automobiles. The expansion of Internet of Things, IoT, wearables and growth in computing and communications end markets also contribute to revenue growth. Additionally, government incentives and investment tax credits under the CHIPS Act have a significant impact on revenue growth. On the other hand, revenue decline is primarily driven by the cyclical nature of the semiconductor industry, which is impacted by broad economic factors such as worldwide gross domestic product levels, consumer spending, and semiconductor industry cycles. Decreasing communications end market, reduced demand due to general market weakness or disruptions like the COVID-19 pandemic, excess capacity, and inflationary price increases also contribute to revenue decline. Overall, revenue growth is driven by increasing demand for advanced technologies and government incentives, while revenue decline is primarily driven by external economic factors and internal inefficiencies. Net income and profit margins have declined in both Q3 2025 and YTD 2025 compared to the same periods last year. The decrease is attributed to reduced demand, excess capacity, and lower production yields on new packages. Additionally, increased overhead and employee compensation costs, high fixed costs, and low capacity utilization rates have contributed to the decline in profit margins. The downward pressure on average selling prices for packaging and test services has also played a significant role in reducing profit margins. Furthermore, the inability to offset price declines through cost reductions or new technologies has exacerbated the issue. These factors collectively point to a challenging market environment that is impacting the company's financial performance. The company's financial performance indicates a fluctuation in its ability to generate positive operating cash flow. In 2024, the company achieved a significant positive operating cash flow of $551,260,000. However, this trend reversed in 2025, resulting in a negative operating cash flow of $451,126,000. This change suggests that the company's financial situation may be experiencing some challenges, at least for the year 2025. The company's debt level and interest expenses have undergone significant changes. The long-term debt has surged by 37% from $923,431 to $1,264,501, while total debt has also increased substantially. Furthermore, the interest expense has risen by a notable 36%, reaching a higher amount in 2025 compared to the previous year. These changes indicate a substantial increase in both debt and interest expenses for the company. But management's outlook and strategy. The company is focused on leveraging its leadership position in services for advanced technologies, providing a geographically diverse manufacturing footprint and growing within secular growth markets. To achieve this, management plans to make prudent investments, manage capacity expansion, and control costs in response to market changes. A key strategy is to return 40–50% of cumulative free cash flow to shareholders through dividends and stock repurchases. The company also expects to receive up to $407 million in government incentives under the CHIPS Act, which will be invested in equipment and facilities. However, management acknowledges uncertainty due to factors beyond control, such as global economic volatility and demand for new packages. To mitigate this risk, they plan to focus on achieving major growth objectives, including transitioning customers to advanced packages and increasing market share. The company's strategy involves expanding its customer base, investing in new manufacturing facilities, improving gross margin through increased capacity utilization and cost reduction initiatives, and developing new packages with higher prices or reduced costs. Management also plans to invest in research and development, capital expenditures, and acquisitions to maintain advanced packaging capabilities. The company has made several strategic moves through acquisitions and divestitures. Key acquisitions include strategic purchases, joint ventures, partnering arrangements, and the acquisition of businesses with integrated operational systems. On the other hand, the company has also divested certain assets, including the Nanium insolvency receipt, although further details on this transaction are not provided. The company's financial summary reveals a clear commitment to shareholder value creation through dividend payments. Specifically, it is noted that the company paid out a significant amount in quarterly cash dividends, totaling $61.3 million over the 9-month period ending September 30, 2025. This demonstrates a deliberate effort by the company to return value to its shareholders, indicating a strong focus on financial discipline and shareholder satisfaction. Concerns about inventory buildup and supply chain disruption are prevalent in the industry. Several factors contribute to these concerns. Inventory buildup. Customers amassing large inventories of AMKOR's products due to export restrictions. Potential for customers to replace AMKOR's products with those from another supplier not subject to export restrictions. Supply chain disruption. Disruptions to suppliers could extend lead times for materials and equipment. COVID-19 pandemic caused extended lead times for some materials and equipment. Natural disasters, pandemics, political instability, hostilities, etc. can disrupt operations and supply chains. International trade disputes, geopolitical tensions, increasing protectionism, and economic nationalism, leading to increasing export restrictions, trade barriers, tariffs, and other changes in trade policy. These concerns highlight the potential risks to AMKOR's capacity utilization and gross profit if demand is insufficient or equipment cannot be efficiently redeployed. That concludes the financial summary for AMKOR Technology Inc. Feel free to comment below, and I will be happy to answer them when possible.